So let me just check that it's all streaming quickly. I think we are. Let's check it out. Sorry guys, it's very, very warm in my office. We have very little airflow, and I apologize for wearing a vest and also wanting to sneeze the whole time, which is ridiculous. So I apologize for that. Sorry, it's very unprofessional. So let's just have a look at euro dollar. So we've definitely got a reaction here. We've got a potential head and shoulders pattern forming. So I would expect that we would have a continuation to the downside for now. Sterling. We had that move. If I sneeze, I apologize. Woof. I just want to sneeze the whole time. Anyway, we had a pullback here. It's quite interesting because this pullback in isolation was actually clearly a bearish signal, but I didn't see that. Wow. I'm so sorry. It's probably just hay fever or something. It's not a big thing, or a change of seasons. Wow. This is not good. I should just probably stop the stream and then just come back when it's over. So sorry about that. Okay, QB dollar also a bearish setup there as well, but no setup today, just a bearish signal. We're looking good on dollar yen. Dollar yen just seems to keep going, so there's no entries there, and I think by the time we do get a correction, it's going to be a bigger one. Probably a weekly correction as well. Dollar Swissy is just a mess, so there's nothing there. Dollar CAD has finally kind of come back up. Now the question is, will it find resistance where it is now? But I think there's a good chance it can work its way up to this level of support and resistance. Sorry. I feel like every time I'm recording this, I'm apologizing for yawning or apologizing for this or that. Anyway, okay, so I wanted to see here if we continue down, but we've pulled up, so let's get rid of this. And let's have a look at the yen pairs in total. So we get a move and a pullback, move, pullback. Basically, they're just continuing up. It's almost almost as though you would get a better entry on the 4-hourly, for example. Pullback into a bullish candle along here would be a better setup. We're starting to get definite bearish divergence. So for the most part, I want to take a break on these pairs, but just showing those to you. Also here, we're moving up, starting to stall. So I think we're gonna see a bit of a weekly correction here. Let's go back to that one. So Euro Swissy. Oh wow, that was just crazy. Euro Swissy, just a mess. Look at this. We kind of start an uptrend and then we swish around. So it's all over the place. So nothing there. Euro CAD. Yeah, it could be a potential level of resistance. So I spoke about kind of price up here, then we had a pullback here, we broke out to the downside, and then we're back here again. So this one I'm going to mark, but with a question mark, because we could be testing, we could be range bound, or we could be testing a level of resistance here, and we could find ourselves going down to the bottom there. Okay. Euro Aussie, no trend, other than a very kind of pullback and a bit of a bullish continuation here off that level and nothing else. Euro Kiwi, that one has followed through, so that one's gone up to this level, and we'll have to just see how that goes. Pound yen, wow, it is boiling hot in here. So pound yen is just running out of steam basically. We've got pound Swissy, no takeoff there, so we can remove this. We are still stuck in this zone, nothing happening there as well. Pound CAD, nothing happening here. I don't know if you can see this, but effectively it's stuck in a little bit of a range on the weekly. If you have a look at it, you can just see it's sort of stuck the last 1, 2, 3, 7 candles, stuck in that range, so nothing there. I do find it's useful to mark a range just so I can see what it is. You just kind of have to grab the majority of it. You don't have to, I'm not worried too much about getting every single pip. Like, do I have to go to the edge there? No, you don't, because excuse me, a range actually has a central axis that it works around. It has a central axis, and then it tends to have an inner range and an outer range. And so the inner range is generally what we tend to notice, and then the outer range might be when it really tries to break out the range and then fails. And interestingly enough, one of the things it often does is once it tries to break out of the range on one side, it usually will then try to break out of the range on the other side. But doesn't necessarily succeed, just that it will try to do that. Pound Aussie. Nice and bullish. The weekly looks pretty good. So we spoke about that as a potential double bottom, but I didn't take any sort of trades off this. We had a nice pullback. That's a pullback to a level and a bullish setup. So that it depends on what kind of signals you look for trading opportunities, but that if you're just doing, basic price action off support and resistance, then that is what you'd be looking for. Okay, so then we got pound Kiwi, nice little breakout of that level, looking nice and bullish. If we'd taken that setup there, we'd still be going. Excuse me, I'm just going to blow my nose one more time. Wow, what a day. So then we've got this sort of outside candle. I'm not going to say bullish. I would say just that it's an outside candle. And here we've got a bearish continuation. So for the most part, I would say Aussie CAD looks as though it's just kind of going to continue down. There's a little bit of bullish divergence there. So although we have a fresh low here, we don't really have that here. Sorry, let me slow down and say that a bit slower. Although we have a lower low here, we don't have a lower low on the MACD, which we should have. So often that implies possibly that price is going to show signs of exhaustion and turn around. All right, so again, we've got a lot of the Aussie pairs that have just moved. There would have been a single pullback here. So if you're looking for traders who take advantage of signals like that, it would be like Larry Williams. So if you're not familiar with his stuff, like you really, really, really should be. He works on kind of bars and probabilities. Very, very cool price action. Purely technical, and he's a phenomenal trader. And so he would say, for example, yeah, you had a pullback here, we're probably going to go. But the thing is, he's not looking for 3-to-1 or 4-to-1 reward to risk. He was just looking for high probability. Take the next candle, trade the next 1 or 2 candles, close it out. Like that's a different way of trading, but it makes money. It's just that approach. So here we had some setups here that look bullish. Then we kind of had another one that looked bullish here, and we've kind of fallen through that. So now it looks as though we've broken the low here. We might get a weekly retracement. So I'm going to remove this. Now it looks as though we might get a weekly retracement that comes down a little bit further. We got Kiwi CAD continuing. So a lot of those CAD pairs, Aussie CAD, Kiwi CAD, are just continuing to trade to the downside. If you're worried about trading these currency pairs on the daily because of spreads, for example, that's not really a factor. And I say that because, the people that when I had my first trading course, which was in 2010, all the people who came out of that course who are still trading, we had spreads. The spreads were insane. We had euro dollar at 1.6, 1.7. We had sterling at 2 or 3. Pound Kiwi was at 12 pips. And we were still trading all these pairs. So spread today is just a fraction of what it used to be. If you're day trading on the 5-minute to 1 minute, you need spreads under a pip. That's fine. But above that, these days is not really so much of an issue. Okay, Aussie Swissy pushing low. So you can see clearly the Aussie pairs are weak. If we just go Aussie Kiwi pushing down, well, this one not so much. Aussie CAD pushing down, Aussie Swissy pushing down, Aussie Yen pushing down. Okay, Kiwi CAD pushing lower. Kiwi Swissy pushing lower, Kiwi Yen also coming down. I'm just referring to the last daily candle. We've got CAD Yen also just continues up, but I think at some point we're going to have a weekly retracement. And the weekly retracement probably in this case will come down to about 103, so down towards this level, towards the 20-period moving average, or potentially a little bit further. So if you have a 50-period moving average, you could use that. The markets will loosely tend to come back to a moving average. It's not a rule, it's just that it's good as a guide. Swiss Yen as well, I think, is potentially going to run out of steam soon. And then we have CAD Swissy. So some of these pairs are just a complete nightmare to work with. All right, so let's go have a look at the other pairs. Gold, as I said, I'm not willing to short at this time because it's coming into a level. This level, which has been strong resistance in the past, could very well act as support. This is the 1.9 level. It's a round number. This is a good area for it to potentially turn around. So in this area, I'm just very cautious. If I was to short it, so there have been a couple of very these are sort of shorting signals that, again, will you get a 3-to-1 out of it? It's higher risk because in many ways you could argue that it's in an uptrend, although it's hitting resistance. You could say that it's in an uptrend. And therefore, would you really want to go against that? And if it is, you just got to make sure that you're trading defensively. So trading defensively means you're taking profit as quick as possible, you've got your stop loss up to date, and so on. Silver as well, you could just see it swinging around. So I'm not really seeing, look, for day traders, it's a different thing. This also, again, we've got bullish divergence here. We have bullish divergence here, and we've got a lower low and a higher low here, which means that it's trying to turn around. So we have an uptrend on the monthly. We could end up having this turnaround. So I am just extra cautious of that. My dog is playing in the pool and therefore has decided that he needs help. She needs help, sorry. In case you're wondering what all this is about, I've been on this crazy diet, which I've mentioned, and I've lost 10 pounds so far. So for people who work in kilograms, I've lost actually 6 kilograms, which is technically almost 13 pounds. And I've got another 5 to go, so I've got a long way to go. What's interesting is one of the side effects is I don't snore anymore, which is, I find fascinating. Okay, so we've got a downtrend here, for example, in copper. We've got a downtrend. That's a nice bearish rejection of those levels and a continuation, but you know that it's going to run into issues at this level over here. You know that's going to be the case because, well, you could see how it reacted at that point in the past. Natural gas. Okay, so natural gas, this is now an issue. So again, I said that I sort of might be concerned about this level, but I'm just going to mark it here. Clearly, it just fails to get through that, and it's a little bit more obvious. In fact, if I remove it here and then place it here, I think that that's going to give me a little bit more of a sort of slightly better representation. Let's just do it like that. You can see it's just struggling to get through that level. It is bullish, however, and I do expect it. Shush, shush. And I do expect it to be able to try and break through that. So now what I'm looking for is to see if we get a bullish candle here or potentially another bullish candle here. Okay. I've been stopped out of the trade because I trailed my stop loss here. So I've been stopped out of that trade, but I like it. It was a good trade. In fact, I'd take it again if I saw that. So I'm still looking for bullish setups here. Phoebe, stop it. Okay, so now absolutely crude oil is looking bearish. Look at this. We've kind of got, this is really what you want to do. This is where the MACD is a very powerful indicator. This is where the MACD is a very powerful indicator. If you've got a level of support here and you've got a level of support here and you find the MACD starts to breach that level while price is close to that level before, then it's likely to continue low. So this is now looking more and more bearish, and I expect it to head low. So Brent crude oil, you can see it's just trying to stay above that level. I'm going to actually add a second level of support in here, and then I expect it to try to stay above that. Wheat had a good run. Look at that very strong bearish engulfing candle. So that's such a strong rejection at that level. There's just not enough buyers at this time. Let's run through these a bit faster. So coffee trying to hold at this level over here. So I'm going to put it in a nice little level over there. The monthly looks bearish, and the weekly looks bullish, and the daily looks a little bit overextended. It is a downtrend, but it is trying to turn around. So what does that mean? It means we've got 2 of the 3 time frames are showing bullish signs, and the last one is showing a bearish sign. It means there's conflict, and we have to wait for it to resolve itself. Sugar, obviously this now, you can see what this is. Very clearly, sugar is doing a monthly retracement. So a while back, probably 3-4 weeks ago or more, I was looking for sugar to come back down to $20. I pulled back to the 50-period moving average, and then it took off, and I thought, okay, it's not going to do it. Now I put that back on the table. I do think it's going to be coming back down to $20. That would be a really nice, sensible place for it to come back down to. Even better would be for it to come and test resistance where it is now, and then find support and then resume the uptrend. We can see the cotton has gone into a downtrend, so nothing big there. The Dow as well, not offering much clarity. So this is what I'm looking for this week. Either this week or next week, I'm looking for these markets to turn bullish. So a small bullish candle could actually turn out well. I think we're in Wednesday now, Wednesday evening. So how it closes on Friday, if it can close bullishly, that would be a good sign for next week, but it doesn't have to. My weekly analysis showed that we'd break the low of this, and if we did break the low, we could find ourselves heading lower. However, I'm still in a bull market mode. All right, so we are in the early stages of a bull market, technically, at least, and it's always hard to believe in the beginning. So that's what I'm looking for. Okay, so we've had another bullish kind of setup here, but waiting to see what happens with that. And again, we've got the bullish candle there. We've broken through here. So there's a lot of signs that say, look, we're more bullish than bearish. And again, if you see these YouTube videos that are talking about doom and gloom, you know what? 5 years ago, they were talking doom and gloom. 10 years ago, they were talking doom and gloom. 15 years ago, they were talking doom and gloom. The market does go through bull markets and bear markets, but the doom and gloom stuff, that as though nobody else has spotted it, but it's everywhere on YouTube, and there's going to be a housing crisis here and there, and there's a few of those things here and there, but not enough, not the way it was in 2007, 2009. Okay, so it's not black swan event stuff, meaning most people are aware of it. We shouldn't be too worried about it. NASDAQ, excuse me, looking nice and bullish. But again, honestly, guys, we really could do with a bit of a correction down to here, but I don't know if we're going to get it now. We could see another move up, and then we could see a failure, and then we could see a move down. But we do need a weekly retracement soon. Monthlies look a little bit overextended, but not so bad. Russell 2000, also look at that really nice, strong resistance. Fine support is pushing up high. That's a really nice bullish signal. We got the FTSE trying to turn around. So here's the thing, because a lot of people kind of potentially shorting these indices, and that's fine as long as you accept that we could be in a bull market, and you're not shorting it because you think we're in a bear market. You're shorting it because you believe that there's a short-term correction to the downside within a bull market, because that changes your strategy. It changes where you put your stop loss and when you take profit and when you get out of the trade, because there's nothing worse than you decide to short the market because, I don't know, you think it's going to go down and we're in a bull market and the market drops a bit and then just shoots up and you're stuck without a stop loss and it wipes out your account, which can happen. Thankfully not happened to me, but I have been in that type of position before, but it was never did massive damage to the account. So I'm just going to keep an eye on this. I want to see if we close with these bullish candles here. I'm very aware here that we have this level of resistance, and if we close above that, if we close above 16,000, that's a really, really good sign. However, we have got a couple of days to do it, but that's not necessarily a failure. We have to see how that goes. We might get a bigger correction next week and then get the bullish recovery. And remember that every time we have a big correction, that's a good thing. Every time we get stocks dropping to a lower price, lots of buyers get in, and then we boost up from there. So you need to have it about every 2 to 3 months, ideally every 2 months, 2.5 months. About every 6 weeks, you need to have a really big correction or a weekly correction. That's the best kind if you can. And it's always big and it's always scary, but it's the best way to get back into them. You can see the Nikkei really doesn't want to turn around. I mean, all of them want to keep going, but they're overextended. And look, they could keep going. It's possible. But I'm just highlighting that those weeklies are now overextended. The most steady one here is Apple. It's absolutely crazy. It's just, it's got those heartbeats. And look how it's going all-time highs. And here's another thing. So I hear a lot of talk, you know, people are worried about there being too much money in stock markets and maybe it's not a real market, because if you follow Ray Dalio, like I do, he talks about real wealth and perceived wealth and so on and so forth. So the idea is that if you have a house, your house is still there and it obviously has value, but that value goes up and down. The value goes up and down depending on the state of the market. Now, obviously over a long enough period of time, it's going to go up anyway, but the exact price will just fluctuate. And so there's this actual wealth and then the market wealth, or whatever the price is that you could sell it for. The problem with this is that there's this idea that the stock market is in a bubble and it's not representing true wealth. And that's the thing is, that's not really what it is. The stock market is just a buyer's market, where that's where people decide to invest money and get a return on it. And it operates on its own rules. It isn't part of the economy. It's not a reflection of the economy. When the economy is just normal, it's not a reflection of it. It's actually a reflection of how much spare cash rich people have or other people have, and they put it in. And that's it. That's all it is. And when they run out of spare cash or they decide to take it out, then you have a bit of a correction. Look at that. It's a bit of a stall happening there. Amazon is going to probably have a correction soon. AT&T is trying to turn around. So I find it interesting. Some of the bullish stocks are wanting a correction, and then some of the more bearish stocks are trying to turn around, which is, again, is a sign of a bullish market. The ones that are bullish are just having a normal retracement, and the ones, now there's more buyers coming in, and the more bearish ones are starting to turn around. So when you look at ARK, this is definitely bullish now. Look at this. It's more of these things. This is, in all the time I've been here, I haven't seen this. Just this one alone. It's been underneath this 50-period moving average for such a long time. Broke below that. Let's call it September 2021, and it's now finally above it. Okay, so almost 2 years. Glencore, trying to stay where it is, but no setup. This one's interesting because there could be a possible sell setup here. But again, do I want to short that? If it was a currency, I wouldn't have a problem with that because currencies can fluctuate. But stocks tend to, I'm very cautious about going bearish on a stock, especially when that one is overall has been nice and bullish. Again, lots of bullish signals here, so that looks good. Berkshire Hathaway looks okay. Look, it's got a little area here. It needs to come in and find support. Coca-Cola. It's a mess. Leave it. BP, mess. Leave it. Actually looking, again, showing a bearish sign. Look at that. Just this little bit of a bearish setup there, like it's trying to hold above the line, it's trying to stay above that one. ExxonMobil, trying to find a floor. That's good. I like it. Nice and bullish. General Motors, nice and bullish. No setup. No setup here. It's a mess. JP Morgan, Adidas. It's a good area to see if it can break through that. Meta, just a mess. Hasn't gone anywhere. It's been a really good performer, but hasn't gone anywhere for the last 2 weeks, give or take so far. So it might be getting ready for a correction. Morgan Stanley. No, we're still in the danger zone for Nvidia, Netflix. Nvidia, we're going to be there for a month or two. So there we go. Hello, hello. Okay, here you can see, for example, a bit of a reaction against that. So PayPal needs to get back up above that level. So stocks have a different personality to currencies and commodities. They tend, for the most part, to go up more than they go down. And so we super cautious about shorting stocks. Spotify looks good. I mean, again, there's definitely a level of resistance right where it is here. Some of these are topping out, and topping out just means they've had a good bull run. They need to have a correction, possibly. But even here, for example, this is trying to stay above this level. It's a good sign. Backing there, but it should be able to get through this. Okay, look at that. Boom. So really good stuff on FedEx. That looks good. Tesla looks good. It's had a bit of a retracement here. Potentially going to try to continue. So the next level that I have here for Tesla is going to be probably 300 at that point. Vanguard looks fine. I'd love to see it have a correction down to 395 or 400. Looks good. They don't look bad. Bonds, just a mess right now. I'd leave them because they're just ranging. So the reason I mention leaving bonds is because if you go back 60 years, it was bonds and stocks. That's all you had. And Buffett was always, and he got this from Ben Graham, who was his mentor. He got this. So stocks, good question. So are stocks naturally bullish? The idea is, so here's the concept. The idea is that companies that list are supposed to be healthy, good companies with great potential, and therefore people invest in them, and it becomes a self-sustaining kind of thing. So they are meant to be like the best of the best. And obviously there are some dud companies that get listed, and obviously there are companies that become duds after they're listed. But the nature of stocks, generally speaking, is that they are bullish. So you can make more money going long on strong stocks than shorting weak stocks as a general go-to rule. That would be the logic. Yes, you can short them occasionally, but what I would do is I would short weak stocks in a bear market, and I would definitely not short the strong ones, and I would go long the strong ones in a bull market. So that way you've got the odds in your favor, because it's always about probabilities, not. So going back to what I was saying, Buffett and Benjamin Graham and so on, he was always saying, look, when the market was bearish, you would shuffle your portfolio so that you would reduce your exposure and put more of it into bonds, and then bonds would give you a better return during a bear market or bear periods. Now, the thing is, you can also look at bonds and go, well, no one's selling them, and if no one's buying them, sorry, I beg your pardon, if no one's buying them, then the appetite isn't there to buy them, which means that the market is still bullish. The market is still looking at buying stocks. That's basically a very simple but really reliable way to look at it. If no one is actively buying bonds, then that's because they would rather put their money into stocks, which means the appetite for stocks is still there. Okay. Cryptos. Okay, so cryptos, hasn't gone anywhere, nothing there. Ethereum hasn't gone anywhere yet. I needed to break through that because I think once we start to break through these levels, there'll be an acceleration because people are waiting for it to pick up to a certain point before they then start to maybe, I guess, start buying more or whatever. Let's just do this. It's really interesting about where we draw support resistance levels. You know, sometimes at the bottom, I'll put it below the wicks, and at the top, I'll put it above the bodies, because I want to see it as I want price to close above or below that level, and I see that level as where the market continues to fail. But at the same time, with the wicks, and this is a personal prejudice, it's like a personal, it's just the way I am, that I tend to put it that way. So everybody should find their own way to do it. But for example, here, you know, I can see that clearly that is the level, even though we've got wicks everywhere. You can see the market, there's just buyers sitting in there trying to prop it up. Okay, so that is it from me. If you look at that dollar index, you can see there's not much happening with the dollar index at the moment. It's still pretty much range bound. It doesn't really know what it wants. It strengthened, then it came back here. So it's just wobbling around. Nothing big to take away from that, but if you've been seeing the markets kind of swishing around on the majors, that's why. And on the whole, my expectation is I know we need a correction on some of these indices on the weekly. But at the same time, in principle, I'm bullish. Like, so obviously every few months I'm expecting a weekly retracement and then looking for that to go. And if you're an options trader, that's the best thing as well, because especially if you sell put options, then you can, that's your entry opportunity. So for those of you who are not familiar with options, selling a put option basically means you look for a really strong trend. You then become the issuer of an options contract. You sell it here. And basically what you're arguing is that if the market isn't going to come back down below those levels. Okay, so I understand if this is a little bit complex for some people, don't worry about it. It is complex for everyone, no matter what they tell you. And so basically, as long as it stays above that level, I can continue to collect the premium. Okay, but obviously the safety in that type of options contract means that I must have had a weekly retracement, and it must be a very strong level, so that I'm protected if I sit below that. Okay, some of you are probably not interested in that, but it's a really good way to earn an income. Okay, so that's it. I'm gonna let you go now. I'm sorry I wasn't around last time, but I'm gonna let you go now, and I will see you tomorrow night. Okay, so thank you very much. I'm gonna end the stream, but again, it's a pleasure. Thank you very much for joining me. You're most welcome. Thank you.